All right, chapter 9 here. So we're going to look at checking accounts and banking services. These are things that you're going to need to start thinking about if you haven't already, in terms of opening a checking account and understanding what the different services that banks offer, as well as fees that they might incur. Um, so in looking at checking accounts, we're going to describe the purpose of a checking account and the forms associated with it. We're going to explain how to use a checking account, and then we're going to discuss the types of checking accounts. Okay, a checking account allows you to write checks to make payments. A check is a written order. We talked about this in chapter 8. Written order to a bank to pay the amount stated to the person or business named on it. If you write me a check, you're saying, Mr. Fisher, I am going to pay you this stated amount of money when you decide to cash that check. It's also a checking account is also called a demand deposit because the money may be withdrawn at any time. So let's say you have $3,000 in your checking account. That $3,000 is able to be pulled from at any point, thus on demand. Checks that follow a process through the banking system. So the payee cashes your check. So you wrote me a check for $500 for being such a great online PFM teacher. I take that, I cash your check, meaning I go to my bank and I cash it. The bank that cashed the check returns it to your bank. So the check goes to your bank, maybe not physically, but electronically. Your bank withdraws the money from your account. So let's say you had that $3,000 checking account. It takes $500 out of that. It sends it to my bank. So now you only have $2,500 left. Your bank then stamps the back of your check, indicating that it's been cleared. A canceled check is a check that has cleared your account. I know it sounds bad, but a canceled check is good. It means you gave me a check for $500. I withdrew that from my bank withdrew it from your bank. I got the $500. Now the check is canceled. I don't think any bank sends paper checks for processing. So now it's just electronic. So they're transmitting maybe an image of a check and sending the money electronically back and forth. You have to maintain the amount of money in your account to cover all the checks that you write or to cover all the expenses. Let's say you set up auto pay on different accounts. You have to have enough money in your account to cover those for every month. A check written for more money than your account contains is called an overdraft. All right. So if the bank does not honor the check, usually stamps it with the words "not sufficient funds." And this is called bouncing a check. So let's say you wrote me a check for $500 for being such an amazing teacher, but your account only has $300 in it, not $3,000. My bank tries to get the $500. It doesn't have enough funds. That is what's called bouncing a check. You do not have sufficient funds to pay me. This will also usually incur an overdraft fee. Floating a check is when you write a check and you hope to cover it before the check clears, okay? So let's just say you have $300 in your account, but you need to write me a $500 check because I'm so amazing. And you're saying, okay, I'm gonna get paid on the 15th of this month. So what I'm gonna do is I'm gonna write Mr. Fisher a check, and I know I'm gonna get paid an extra $300 on the 15th. And I'm gonna hope Mr. Fisher doesn't cash the check before the 15th, because then I'll have $600 in my account and it'll cover the check. So this is really risky. It's really risky because if you don't have the money, then you're going to overdraft and then you're going to be charged. And floating a check is actually illegal in most states because then the money that I was supposed to get from you is gone and I don't ever get it and you're in trouble. So it's bad. Don't do that. There's some big advantages of checking accounts. They're convenient, they're safe. There's a built-in record-keeping system. They send you statements that you can include. You have access to bank services. It's pretty easy to open a checking account. You really just need to sign an authorization form and provide an initial deposit, meaning put in money, and that's really all you have to do. Here's what a check looks like. You may very rarely use them. I very rarely use checks in my life today because of having credit cards and direct deposits and things like that, but there are times when you will need to use them. So you'll have your name and address, the check number starts with number 1, and then in a book of checks there may be 50. The date, the order of who you're paying to. So let's say you were paying it to me, it would be Mr. Fisher. The written amount, you're giving me $500. Okay, so you would actually write it out in words. So here, 36 and 12 out of 100. That's 12 cents. If you were writing it to me, it would be 500 and 00 out of 100. And then you write it out numerically. The memo, this is optional. You could write why you're writing the check, and then you have to sign it. And then when I get the check, I sign the back of it, and then I deposit it. So the ways you would use your checking account: writing checks, paying bills online, making deposits. Using a checkbook register is a booklet that is used to record your checking account transactions. I would say very few people probably use that anymore. Bank reconciliation is basically making sure that what you write down in your records matches what your bank has. And although I would say most people probably don't do this anymore, if you like to write things down with pen and paper, this is a good thing for you to do. I'm going to skip through this because I don't think it is relevant. It is relevant. I don't think it is that useful. You can pause and go look in the book if you want to know more about reconciling your checking account. To endorse a check is to sign the back of it. So you give me the check for $500, I flip it over, I sign the back, and then it's endorsed. That's it. A blank endorsement is when I just write exactly what my name is. Special endorsement is an endorsement that transfers the right to cash the check to somebody else. So maybe you write to me, and I say pay to the order of somebody else, and I give the check to them. Restrictive endorsement restricts the limits of the use of the check and says only this account, only this person, etc. There's a number of different types of checking accounts. There are joint accounts, special accounts, standard accounts, interest-bearing accounts, and share accounts. So a joint account would be like a married couple might open a joint account. There are special like student accounts. There's a few different types of checking accounts. Okay, banking services and fees. We're going to look at some services that are available at most financial institutions. We're going to list and explain fees charged by financial institutions and their services. A full-service bank is one that offers every possible kind of service: saving accounts, checking accounts, credit cards, safe deposit boxes, loans, ATMs. Some banks are full service and some aren't. Some are just online, some have physical locations, etc. Most banks offer FDIC insurance, which means it will guarantee and insure your money up to $250,000 per account. So basically, if everything crashes and you have $250,000 in the bank, you are guaranteed to be able to get that out by the federal government. A certified check is a personal check that the bank guarantees or certifies to be good. A cashier's check is a check written by a bank with its own funds, and a traveler's check is a check in specific denominations that are used instead of cash while traveling. Honestly, I've never dealt with any of these things in my life. So I really don't think that you will have to, but look in the book if you want more info about that. Okay, money orders. Sometimes money orders are required for random things. If you don't wish to use cash, or you don't have a checking account, or you're trying to pay somebody who doesn't want to use cash or doesn't use a checking account, then you can use a money order. It's kind of like a check, except that it can never bounce because they charge you for it up front. So let's say you want a money order for $10. You can go to your bank, or a lot of times like a 7-Eleven or a Rite Aid or a Walgreens or something will do it. You say, I need a $10 money order, and you give them $10, and sometimes there's a service charge. They give you the money order, and then you can give it to whoever you want. Debit cards. This is probably what you'll first be using rather than checks. It is basically a credit card, except it is only linked to your checking account. And you can pay for things using your debit card when you go to the store or you buy things online or whatever. And the amount of the purchase is deducted from your checking account. So let's say you go to buy PS5 and it's, $500. You pay with your debit card and it automatically takes it out of your checking account. There's also credit cards. So banks offer credit cards that essentially you use to pay for things, and then you pay the bank back. That's what a credit card is. You're basically borrowing money from the bank in order to pay for something with the promise that you will pay the bank back. We'll talk more about that later. Overdraft protection allows you to cover checks up to a specific amount. So if you have overdraft protection, let's say you wrote me that $500 check, you only had $300 in your account, they will cover that for you, and then you have to pay them back. That's what overdraft protection is. ATMs are automated teller machines. Those you go to, and you can use them to get physical money out from your account. So you go to it, you use your debit card, you put it in the ATM, you select how much money you want, and then it spits out cash for you. You can also deposit cash. So let's say you have $100 in cash, you can go to the ATM, you can put that money in, and then it will add to your digital account. Online banking, I don't even really understand what telephone banking is, but let's just talk about online banking. You can do pretty much anything online now. Transfer money, pay bills, get your accounts balances, see which checks have cleared, etc., using your online account. Electronic transfers of money is things that you can do, like, think about it like, what am I looking for? Venmo. It's like Venmo. You can send money through your bank from one person to another, or from one business to another. That's what electronic funds transfer is. A stop payment order is a request that the bank not honor a specific check. Usually it's because the check has been lost or stolen. So if you wrote a check and you don't know what happened to it and it got lost, you would send a stop payment order. Usually what's annoying is that you actually have to pay to stop the payment. So usually it's like $30 to stop payment on something, which doesn't make any sense. Okay, safe deposit boxes are literally like little, little like safes within a bank that you can put stuff in, and they can store your valuable items. You might get charged a yearly fee, but it makes sure that items won't be lost, stolen, or destroyed. You've probably seen these in like movies where people go find their safe deposit box and they've got cash in there or whatever. You might keep important certificates, mortgage papers, stocks, bonds, jewelry, coin collections, etc., any valuable things. Banks also offer loans, so they will give you money for a car or home improvements, etc., and attach to it as an interest rate, and then you have to pay them back with interest. Usually there's somebody who's what's called a notary public on staff at the bank, and they basically make things official, and they provide services for account holders, usually without charge. Banks can also help you with purchasing or selling saving bonds. We'll talk about that more later. And investment services might also be offered. Banks charge fees to their customer. So you want to choose the right kind of account for you. You want to be aware of the fees that might exist, and you want to make sure that you shop around and find the account that's right for you. Be aware of the rules of your account, because you might have to pay high fees if you didn't realize that there were certain fees and then you did something you weren't supposed to do. Examples of bank fees are loan fees, trustee fees, overdraft fees. Sometimes you have to maintain a minimum balance in your bank account, and that's kind of frustrating, but it does exist as a fee. So, all right, that's it for Chapter 9.